This week we are going to see how my monthly puts are doing, and I'm going to share with you my short put strategy. Welcome to my channel. I'm Mike, and here I document my journey from $10,000 of my own money to $80,000 in 3 years. In this episode, I will show you my strategy to get a 700% return on investment in 3 years. What's my minimum target, my desired target, and where I see my risks. But because it's Monday, we first get into this week's trades. From last week's trades, I managed to close the AMD put at $85 strike price, and I got a net profit for $234. And Palantir's $30 weekly put for $149. Since my other trades have longer expiration dates, I am not yet satisfied with the profits, so I decided to let them decay for another week. My fourth week of trading was quite boring. Most of the week, I looked for trades, but I didn't manage to get much. Let's see the charts of this week and why did I sell what I sold. Let's get into the trades. The first trade of the week was WBA, Worldgreen's Boat Alliance. I sold 4 contracts at 48 strike and I received $224 in premium. This is the nearest term of expiration from all my contracts. As you can see, it expires at the end of this week. I entered the trade on the 9th of February and had an opportunity to close the contracts next day for 60% profits. But I got greedy. Thinking of the US holiday on Monday, it made more sense to wait for the time decay to go in my favor for 3 days when the stock market is closed. I chose the $48 strike because it's a recent support level. Also, in my opinion, WBA is a very interesting stock to hold on the long run. My next trade was on Palantir. I sold 4 contracts at $25 strike with expiration on the 12th of March. I have received $320 for this trade. I have traded Palantir in the past and I will most definitely trade it in the future. I really like the stock fundamentals and the price action. I've chosen $25 strike because it is a very strong support level. Although Palantir has earnings tomorrow, I have no issue holding through this. Unless the stock tanks $4 or $5, most probably the premium on the contracts will decrease dramatically due to a volatility collapse. My final 2 trades are new entries in my watchlist. For now, these are more speculative plays than my normal trades. NVTA Corporation is a $10 billion genetics research company moving in a slight uptrend. I sold 1 contract at $45 strike until the 19th of March. I got $310. As you can see on the chart, $45 seems to be a recent support area. In this trade, I took advantage of the volatility increase in premiums due to upcoming earnings report. Also, the chart pattern looks decent. My second high-risk play is Bionanogenomics. This is a hype stock and I like the chart. I sold 2 contracts at $9 strike for the same expiration date as NVTA and I received $242 for this. If you look at the chart, this does not resemble my other plays. Why did I enter this trade? First of all, because of boredom. Yeah, I know, this is not the best decision, but hey. What you gonna do? What you gonna do? My total risk is $1,600, so less than 10% of my account. It's an ARK investment stock pick, so that's where the hype comes from. I like Cathie Wood and ARK Investment a lot, so I decided to put my faith in their research. I chose the $9 strike price since it is below the recent support. Compared to my other trades, I didn't place the strike on the support level due to the risks it involves. Also, BNGO has earnings 1 day before the expiration, so I am betting on a pre-earnings run-up and a decrease in premium. As you were able to see, I only managed to sell 1 weekly put. The rest were up to 30 days of expiration time. Now, the question is, how do I choose when and what I sell? I've been trading since I was 20 years old. My first 10 years were more of a hobby. My first 8 revolved around Forex, never reaching the consistently profitable target. So after blowing up 2 of my accounts and got my final account just above break even, I decided to take on the hype of crypto. It didn't take much, but I realized me and crypto were not a match. After many failed attempts at trading, I decided to finally take on the US stock market. But this time, take things a little bit more serious. I started with penny stocks, but they are way too time consuming for my current situation. For over a year now, I am actively trading options. I tested all of the strategies and tried to find a best fit for me. I've gone from buying calls to selling spreads to buying calls again, and finally discovered how to sell puts for consistent profits. The biggest risks when shorting puts are 1. Picking the wrong stocks. Choosing to trade stocks you never heard of or never watched how they move. My current watch list has around 130 stocks, which I've been watching for more than 1 year. I know their news, I know their levels of support and resistance, how volatile they can get, and so on. The second risk is bad news. A company can always have bad news. A lawsuit, a major client moving to a competitor, natural disasters interrupting production. You need to evaluate these kind of news and decide for yourself whether it's a short-time issue or it can actually affect the stock's fundamentals. And the third risk is the market crash. As we have seen last year in February and March, the stock market can go down quite fast. The recovery from last year was as fast as the fall, but that isn't always the case. On average, a bear market can last somewhere around 10 months. Do you have the cash to sustain such a fall? What do you do if the market crashes for 30%? Do you cover your puts and accept the loss, or can you withstand the fall? These are all questions you should ask yourself before starting to short puts. When I wrote down my strategy, I looked for average returns on short puts across multiple industries and different volatility periods. I considered that 1% of my cash per week is a minimum target for my risk tolerance and my expected profits. My average aim is a 3 to 5% of my used margin. If you want to see a more detailed video on cash accounts versus margin accounts and how I actually use my margin account, please leave a comment down below. All this strategy was calculated around the 1% minimum target. This means I can do 50% per year. If things go better than expected, I can do more, but this is not something I can guarantee. But how do I get 700% return on investment in 3 years if I have a yearly gain of 50%?
It's a lie! It's a lie!
As I'm saying in each intro, I take $10,000 of my own cash. The rest is the bank's money.
No, God! No, God, please, no!
Before calling me an idiot, let's look at the number. If I start with $10,000, after year 1, I will reach $15,000. The second year, $22,500, and so on, until I will reach $80,000 in more than 5 years. But if I start with my $10,000 in cash and the bank gives me another $10,000, by the end of year 1, I will make 50% of my total account. That means $10,000. This way, I will be able to repay my loan by the end of year 1. I do the same for the second year, so by the end of 2022, I will have $40,000 in my broker account. In the third year, I will end up with $80,000 in cash and my bank loans paid in full. Is this risky? Yes, yes, yes. When thinking about the bank loan, I considered my current financial situation and the maximum amount I would be comfortable to lose. For my current financial position, a $10,000 loan is not the end of the world for me. I will not become homeless if I lose all the money, and I will not starve. You always need to take a calculated risk when you decide to begin a journey like this one. What if something goes wrong? Because remember, if something can go wrong, it will go wrong. Please leave a comment down below if you agree or you disagree with my plan. I would like to see different opinions. I learn from each and every one of you. If you enjoyed this video, don't forget to smash the like button. If you want to get notified when I release a new video, hit the subscribe button and click the notification bell. Thank you for watching and have a great trading week.